Fibonacci is one of the most powerful tools for technical analysis, but most traders use it wrong or don't understand its full potential. Today, I'm going to break down how to use the Fibonacci Retracement tool for day trading, covering what is the Fibonacci and how can we apply it to trading, how to use the Fibonacci Retracement tool and the Fibonacci Extension tool, the optimum trade entry for high accuracy setups, and a step-by-step guide on how to use the Fibonacci tool for better entries. If that sounds good, smash the like button, don't forget to subscribe to the channel, and let's get into it. Quick note, if you want to master your trading psychology and develop an unshakable mindset, I'm developing an exclusive course to help traders like you stay disciplined and level up. Join the waiting list now, the link is in the description. First of all, what is Fibonacci? The Fibonacci sequence is a mathematical pattern where each number is the sum of the previous two numbers. So starting at 0, 0, 1, 0 plus 1 is 1, 1 plus 1, 2, 2 plus 1, 3, 3 plus 2, 5, 5 plus 3, 8, 8 plus 5, 13, and so on. In trading, we use Fibonacci ratios, which are naturally occurring proportions. You can find them in nature, you can find them in the markets, you can even find them in your own psychology. And we use them to find potential areas of support and resistance, as well as trend reversals. Here are some key Fibonacci levels to know. So first of all, looking at the retracement levels, the key levels would be the 23%, 38%, 50%, 61%, and 78% levels. These are generally the most known levels from traders, and you can use them depending on what strategy you are using. So you don't just trade these levels alone, you use them in confluence with other factors. And for example, scalp traders who like to get in and out quite quickly may use the lighter levels, the 23% and the 38%, whereas other traders who maybe use a higher time frame would probably prefer the deeper levels, the 50%, 60%, and 78% levels. And there are also extension levels, which would be the 127%, 161%, and even the 261% levels. Now we're going to go through what this means, what retracement levels are compared with extension levels, and everything right now on the charts. I've been trading with the prop firm, the 5%ers, for some time now. As a prop firm, they are a great option if you want to trade a larger capital, where you can trade one of their account sizes and you both take a share of any profits that are made. But they don't stop there. As well as offering account sizes for trading, they also offer these extra features, including live trading room, free webinars and workshops, and one-on-one performance coaching. They have 3 different programs that they offer to traders: the Hypergrowth, High Stakes, and Bootcamp program. I'm currently funded with the Hypergrowth program, so I am trading that live account with the 5%ers and taking a split of profits that are made. And I'm currently enrolled in the High Stakes program challenge as well. And my favorite feature of the programs that the 5%ers offer that differ from any other prop firm out there is the fact that they have removed the time limit, which means that you have an unlimited amount of time to pass the program. This is a massive game changer, and it can really help you to avoid falling into a stressful situation when you are trading. Let's face it, trading can be stressful enough. If you want some more information, or if you're ready to have a go for yourself, do check out the link below in the description. You may be wondering, how does Fibonacci apply to trading? Well, the markets move in waves. We rarely see straight lines. Instead, price moves in impulse waves, a trend direction, and corrective waves where we see a retracement, a pullback. The Fibonacci is a brilliant tool to help us to predict where price is likely to pull back to before it continues with that impulse wave continuing the trend. So it is a trend-based tool. It's not an indicator like a moving average. It is a tool that is using pure price action. For example, in an uptrend, you will see a rally up of price will pull back. Then we can apply the Fibonacci retracement tool to identify where price is likely to pull back to so that we can get in for a position long. On the other hand, in a downtrend, we will see a large drop in price will pull back, pulling up before continuing lower, and we can use the Fibonacci retracement tool to help find zones for sells. Let's focus on the Fibonacci retracement tool. There are 3 steps to follow to be able to use this tool effectively. Step number 1 is, of course, to identify a trend move. Select a swing low in an uptrend, identify the high, and then apply the Fibonacci retracement tool from the start of the move to the high. Step number 2 would be to look for key Fibonacci levels. Price will often retrace to these levels before continuing its move up. The 62% to 79% zone is what is commonly referred to as the optimum trade entry. That's the zone that I like to use for my trading, and I will talk more about that later in the video. And step number 3, it helps to improve your accuracy if you wait for a confirmation at a level. So this can be a reaction by price. You might be looking for a specific candlestick pattern, a pin bar rejecting these levels, or a large engulfing candlestick. And then you can enter the trade remembering to set your stop loss and your take profit order. Let's go through an example together. Here we are on TradingView, the charting platform that I love to use. I've used this for over 5 years now. It's fantastic. And I am using the Forex currency pair pound-dollar in this example. That is the pair that I day trade and profit from, but this Fibonacci retracement tool can be applied to pretty much any market. I'm not saying that it will always work. Obviously, there are risks involved with trading and you must make your own decisions. Don't just go into the market and use this tool and expect to win every time. If it was that easy, everybody would be doing it. But of course, you can take what you're learning from this video, you can apply it to your own strategy, to your own market, and hopefully it can help to increase your accuracy and your profitability. So looking at pound-dollar here, I'm going to just go from this example. It's the start of a new week on a Monday, and what I would do first would be identify the trend. And as we can see from this open on the Monday, we've got a high, we've got a low, not breaking this open, and price pushes up, making a new high. And from here, you can apply the Fibonacci tool to market structure. In fact, let's go through this together in real time. As we get a drop down, we're waiting for price to push above this level and close. And that's when you would apply the Fibonacci tool. So I choose personally to use it from the bodies only. And if you are looking for a long, you go from the bottom of the previous pullback, the previous swing low, and you drop the high here at the body of the high, of the highest point of the trend. Now price is continuing up here, so we can simply adjust this and drag it up with that. And as it has made a new swing high, we can adjust this. We can go from the body here and adjust it to the high up here. And I'm using this one because it's the stronger pullback. As you can see, price has dropped down, and I have this specifically set up to show the optimum trade entry, but you can right click on the fib and open the settings box here. And if you go into style, this is where you can customize your fib settings. So I've just changed the settings on my fib so that you can see what a standard fib tool could look like. And you've got the one here, which would be the bottom of this pullback. The 78% level is the deepest pullback you're going to see down here. We've got the 61%, the 0.5, so that's half of a move down, covering half of this push up, 0.38% and the 23%. So these are the different levels you can use. And it's best to experiment with this and apply it to your own strategy, the time frame that you like to trade, the market that you like to trade, the asset, and see what works well. Personally, as I said before, I like to use the optimum trade entry level. But as you can see, price is dropping down, and that's why step number 3 is really important, which is to wait for confirmation, because at the moment we have dropped into these levels, but price is still dropping. We've got a lot of red candlesticks here. What we're waiting for is a clear candlestick to show that the trend is going to continue. This would be quite a nice indication because price is bottoming out. We've got a large bullish candlestick up. Dragging this out further so you can see the lines, and you can see here that price is curved. We've got another candlestick here, and that would be a really nice one to use because it's a bullish engulfing candlestick and it looks like it's making a double top bottom pattern. So from there you can follow on with your steps of placing your order, remembering to place your stop loss below the low of the pullback here, and an appropriate take profit order as per your strategy. Whilst the Fibonacci retracement tool can help us to find pullback entries, the Fibonacci extension levels can help us to set profit targets. Here are some of the common extension levels with the Fibonacci extension. So that would be the 1.27 and the 1.61. These are the most powerful target levels for price expansion. You can also use the 2.6 and the 3.6 for more aggressive targets for stronger trends, so if you're looking to make more profits. And going back into the settings here, if you wanted to set those up, you could simply add them onto the chart here. So because the 1.61 is going to be a target, I've added this little minus sign because it's actually going to be above. It's a little bit confusing, but you have to just play around with it to see how it works. And the 1.27 one here, if I add my minus sign before, that will also add that here. So we have a couple of price targets here. Now I actually set my profit target in this example below those, but let's just move them up to see. So this would be, for this example, aiming for a Fibonacci extension target, which would be a larger profit target. Which it did achieve. And there's also room here for another entry using the Fibonacci retracement level. What do I mean? Well, if we remove this first Fibonacci retracement tool here, and you can see that from this swing high, we got a low here and price actually made a couple of new highs. So let's take this one here. So going back into our Fibonacci retracement tool, dropping it from the low of this previous pullback and dropping it at the high here, you can see that price comes back down back into these levels. It comes down to the 0.61 and we get a really nice bullish pin bar candlestick right here, which gives us room for another entry, which can help us if we want to add to positions or if we want to take out multiple positions trading. But maybe that's for another video. One of the best kept secrets in Fibonacci trading is the optimum trade entry zone, the area between the 62%, 70% and 79% retracement levels. Why is this zone powerful? Institutions and smart money often enter trades here, using liquidity grabs. Price reverses with high accuracy from this area. It can offer a low risk and high reward setup. How to trade the OTE zone? Well, let's go through an example together. So I've loaded up the chart here for gold just to change up the asset groups a little bit to test out the Fibonacci retracement tool. I'm still on the 50-minute time frame because I am a day trader and this is my usual time frame. But of course you can try it out on different time frames. Zooming out here, it's safe to say that gold has been in an uptrend, making higher highs and higher lows. So I'm going to zoom in on the intraday detail here and see if we can find a nice place to place our Fibonacci retracement tool. So first of all, I would be looking at the low of the day, which is down here, using the bodies only and dropping this at the highs here. Now at the moment, this is set to the generic settings for the Fibonacci, but I want to show you the optimum trade entry. And I have a special template set up for this. If you want to find out more information, I'll just open the settings here and you can just pause the video and make a note of these settings for yourself. So it's similar to how we were before, but we have less lines which make it more clear to identify the best entries for a trade. We've got the line here right at the bottom, our pullback. We've got these three levels, the optimum trade entry, the 62%, 70% and 79% levels. And you could design this in different ways. I like to keep it quite simple. But what I'm looking at here is for price to come back to these levels. It looks like it may be making a new high. Let's just see what happens. So price is pushing up. Let's adjust these levels accordingly. And I'm going to drag my bottom of the fib tool to this most prominent pullback here before we've got this gap slide and the push up. So price is continuing up even more. So let's just adjust this once more to the high and we're going to use the most obvious pullback, which is this dip here. We're looking for key swings in the market. As you can see, price has dropped down to this optimum trade level. Now, although we got some big bearish candlesticks down, we've got this green bullish one. Let's just see if we get another candlestick signal before we take an entry. So this is a nice signal. This is a bullish pin bar. We've got a long wick here rejecting these levels and the body here. You've got two options. You could place the entry down here as a buy limit, or you could just get in at market here. I will go down here because that would be my usual strategy with this tool, where they stop below the low here and a target would be your choice. You could aim for a break of the high. You could aim for a set figure, for example, a 2R target, which would be a 2-to-1 profit loss ratio, or you could incorporate these Fibonacci extension tools if you want to aim even higher. For this example, I will stick to a 2R target, just breaking the high here. And you can see that price, it took quite a while for price to hit this. And I want you to just notice a few things. First of all, notice that we didn't actually get triggered in here before price went up to the target, but it came down and it still triggered us in. It's still drawn to these levels. If we adjust this and drag it even more, we're still within these levels. And once we got triggered in, price pretty much went straight up to the target. It took some time. And I've kept this trade example in because this is a really nice example of how trading can work. It's not textbook. You don't just get in and instantly hit profit. Sometimes it can take a while, and it's important to remember that. But from the entry of this 9 o'clock on the Wednesday, the 19th of March, it still hit the take profit later on in the evening. Which, if you're the kind of trader who can set a trade, set a stop, set a target and forget it, it works great. If you're the kind of trader who struggles with the emotions involved in trading in this way, it sounds like you need to work on your mindset and on your psychology. If you want to learn more, check out the link in the description for my Mindset Mastery for Traders program. Let's look at some key takeaways from this video. Fibonacci is a powerful tool to help you to find trade entries and exits. You can use the Fibonacci Retracement tool to help you to find high probability entries for positions, whether you're looking for a long or a short. The 62% to the 79% is also known as the optimum trade entry, the OTE zone, and that's the zone that I prefer to use for my day trading. Remember to always combine the Fibonacci Retracement tool with other confirmation signals, utilizing price action, market structure, momentum, and candlestick signals. If you found this video helpful, please remember to hit that like button. Don't forget to subscribe to the channel for more content, and I'll catch you in my next video. Thanks for watching. Bye.